Well, it's been a long month, particularly for the banks, starting with Silicon Valley Bank and then going right over to UBS and Credit Suisse. And to take us through some of the corporate aspects of what we are seeing in the banking sector, welcome now Erik Gordon. He's a professor at the University of Michigan Ross School of Business. So Erik, great to have you with us. Thank you so much. Start with UBS Credit Suisse. It didn't look like this was necessarily UBS's idea. Looks like the Swiss government had something to say about it. But what are the challenges now for Sergio Ermotti as he comes back to be CEO of UBS in this merger? I think the first ever of two systemically important financial institutions.
He has double the trouble. In any merger, there's, the standard problems. Integrate the IT systems, figure out who's going to be, in HR, who's fired or not. But with banks, you have double trouble because you have to figure out how to integrate the risk management. So now you have a new asset profile. UBS has its assets. It has Credit Suisse's assets. It has its own liabilities. It has Credit Suisse's liabilities. It's a whole new risk management game. And boy, if there's one thing we've seen in the last 2 weeks, managing both sides of the balance sheet is critical at a bank. Then they have to figure out things like what lines of business are they going to keep? Are they going to keep two investment banks at all? What about the trading desks, wealth management, investment products? And then finally, they have to go through the clients and the customers. Which Credit Suisse clients do they want to keep? Do they want to keep them on the same credit limits with the same credit pricing? Integrating two systemically important giant banks is really double trouble.
So, Erik, you teach the question of mergers and acquisitions out at the Ross School. Give us a sense of what makes a merger work or not work. And specifically, I'm curious about culture. We saw the memo come out from Colm Kelleher, the chair of UBS, saying we're going to put a culture filter on Credit Suisse people. That may have been not the perfect words. At the same time, by all accounts, there are two very different cultures here in these two very big banks.
That's probably the biggest stumbling block for mergers. You can calculate a lot of other things on spreadsheets. You can do lots of boxes and arrows planning. But culture you can't change quickly. It takes years or decades. And, Credit Suisse is this risk-hungry, gunslinging bank, almost constantly in trouble because of its risk appetite. You have UBS, not so much like that. They are going to have trench warfare. And it's one thing to say, I'm the boss, and we're going to filter out everybody who isn't our culture, and we're going to impose our culture. And it's another thing to get tens of thousands of employees to actually switch culture, to switch what's made them successful for the last 20 years to something new.
Well, and is time an additional challenge for Sergio Ermotti? I mean, I was at the Capital Cities ABC when it was bought by Disney, and I've watched that from the inside. You need to get those two cultures on the same page as soon as you can, because otherwise you end up with fiefdoms fighting with one another.
Yeah, he's either going to get this accomplished in 60 days or it's not going to happen. We'll be talking to each other 3 years from now, and they'll still be battling each other. So you've got to create one culture. You've got to do it quickly. You've got to do it from top to bottom, or you fail.
So take us out to Silicon Valley Bank and Silicon Valley, which you know a lot about. You deal with a lot of these tech startups, a lot of the venture capitalists. What happened to Silicon Valley Bank, and to what extent does it going out of business really affect the overall infrastructure of funding new technology?
The failure of Silicon Valley Bank is going to wreak big changes in sort of VC, early stage tech company innovation land. Silicon Valley Bank, for one thing, was really the only bank bigger than a shoebox that would lend money to these early stage companies. We're talking about companies that sometimes have no revenues. They have no assets for collateral. No bank in its right mind would lend to them, well, except Silicon Valley Bank. And they were successful at it for 20 or 30 years. That goes away. That's a big hole to fill. And there are other holes to fill. CEOs of early stage companies that were going to Silicon Valley Bank for personal loans to get some cash out before they could get the company public or sold, cash to buy a Porsche or a home in Malibu. They got nowhere to go. They're going to have to wait a few years to be getting their new ride.
Every one of these crises is different from the last one, but I wonder if there's one parallel between this and what happened in 2008, 2009. In this sense, we thought that housing prices would always go up. Just recently, I think we basically thought tech valuations would always go up, so you could lend against those valuations. Pretty confident they go up. I'm not sure they are, given where we are right now.
I think that's it. Bingo. The thing is this idea that because we've seen things go like this, they're somehow going to hold themselves up in the air, 1,000 feet in the air forever. What's most predictable is that they're going to come down, except we can never seem to predict what seems to be most predictable.
So, Erik, I wonder, put this in a larger competitive situation with China. We are in a big competition, the United States and much of the Western world, with China in terms of technology. Is this going to handicap us in that competition now because we cannot generate the same capital to invest in great new ideas?
I think we're going to have to adjust because China has a number of advantages, including if the Chinese central government, the equivalent of Washington, decides that batteries or something is important to the future of China, either its security or its economy, which are linked, they just make it happen. They put out the money. Here, we're a private marketplace. And when a private market is disrupted, we're going to have to think about jumping in and keeping some of these companies alive, or we could lose whole generations of technology and be dependent on China. And that would be tough to imagine living through.
Erik, I'm not sure if we're jumping in, but we do have the Chips and Science Act, and the federal government is now stepping in at least. We have the Department of Commerce really putting some money out there, particularly in the semiconductor space. Is this the perfect time for that to happen, or maybe less than that?
The perfect time for this to happen was, 5 or 10 years ago. All the money that we put into the economy that seemed to have done nothing but inflate prices, it could have gone into more productive things like getting ahead or at least staying up to date in critical industries. So the timing is as perfect as it can be, given that we blew the timing 4 years ago.
On the financing side of it, who and what is likely to step into the absent Silicon Valley Bank? I mean, is that going to be the big banks? Is it going to be capital formation of a very different sort than lending from a traditional bank?
I think it'll come from a couple of sources. I think a couple of the big banks will dip their toe in it. They'll say there is a way of making money from this. SVB did make money in its better days. So I think we'll see some action there. They will attempt to imitate Silicon Valley Bank. I also think we will see things like hedge funds, flexible private investors who can invest in these illiquid assets. What is more illiquid than stock in an early stage company? But we have giant pools of hedge fund and private market money that I think will be tempted to get in and, find the next Google, find the next big hit.
And Erik, we heard today from the White House they're recommending some changes in regulations with applicable to banks. Not clear to me whether the White House can effectuate those. We do have the Federal Reserve. But what do you expect to happen?
Well, I think there'll be the usual Kabuki Theater in Congress. We've already seen a couple of days of that. There will be the people who love regulation saying, see, we need more regulation. I'm not sure if we need better regulation or we need better regulators. They seem to have missed the obvious at Silicon Valley Bank. And I don't know if they would have done a better job if Silicon Valley Bank was classified as a bigger bank. So maybe we do need some better regulation, but we certainly need better regulators.